Hey guys, so Merry Christmas. So what is it today? Today is the 11th, January 29, December. So it's almost New Year. There's 3 days until the New Year, 2 days. And hopefully everyone's having really nice holidays. So what I'm gonna do is I'm gonna have a look at gold, because gold has broken out of this channel, out of this consolidation, which was for 84 days consolidation. So since about September, so like 3 or 4 months, right? October, November, September, October, November, December. So 4 months, and here we have the breakout. You can see there. I had my other drawing here with a few more lines, so we broke out. We're having a little pause here. So what you can see on the daily chart is a little indecision candle, I guess. It's got 2 long wicks and actually pretty much no body at all, which is a little bit of a pause here, right? We smashed through this volume by price resistance, and we reached this high point here. So and we pretty much double topped there. So we're likely to consolidate a little bit longer, unless the bulls come out swinging and just break it first thing when the market opens. 30th, I guess on the 30th it's open. So yeah, let's see. And you can see here I had the green lines here as well, which was my other little rising wedge sort of channel, and that broke bullish as well. So I guess a lot of people were expecting it to consolidate one more time here. I was thinking maybe it will do that as well, but it didn't, and the price decided to just break through on Christmas, pretty much just before Christmas, 24th, and yeah, it's got some good gains. So now what we want to do is we broke bullish, right? This is what we wanted. Now what we want to do is we actually want to add to our positions. If you haven't got any positions on this drop at the bottom here, you want to add to more positions to go forward, because this is what we wanted, and this is what we got. This is our first bullish signal, right? Our first bullish signal breaking this channel, and what we need to do is once we break out of here, 1557, then this will be our second bullish signal, and that's the bull market, I guess. So what I've done is I've put a few notes for myself, what I'm looking for on paper. You can see here for gold, and I'm just gonna go through it a little bit in this video and see how we go. So what we want to do is so we were let's have a quickly on the 3 monthly chart. So 3 monthly is very bullish, very extended. Are we gonna come down more? You know, there's always a possibility of us coming down more to set a 3 months high low, and this candle will close soon. So we have to be aware. So our monthly looks like still a bull flag. It still hasn't broken. It's still a bull flag. So the confirmation is going to be break above the 1556, right? If we break above that, then we will be going, and we will be in this territory here, which is the all-time highs from 2011. So let me just get a sip of water. Okay, so the RSI is like we can always reject and go down, but we want to look bullish. We broke bullish out of the daily channel. So what was our guide? Our main guide last time was that we have to hold this 21 EMA and we have to hold the 50 RSI, because historically, if you look back at previous bull market in 2008 here, the RSI after this drop here in 08, the RSI never dropped below 50, and the EMAs 21 and 13 always acted as the support until the top, and then we dropped down here in 2011. So we were looking at the same thing here. The first breakout, the EMAs were support, like with the price action going a little bit below it, but never really too much below it. So here we were looking at the same thing, and what we see here actually, back in April, May, we had the candles closed below the 21 EMA, but this time we pretty much closed always above the 21 EMA. So this shows that the bulls are aware, the bulls are like a little bit stronger if we compare it to the 21 EMA, right? They're a little bit stronger now, they're a little bit more positive, and they're buying the dip faster. So I've said this is a good buy area, so that's and we did push up and we broke through now. So this is what we wanted. Now what we want to do is we want to add to the position. And where do we do that? Like, so we need to think, where can we do that? Where is a good spot? So what I've done is I went on the daily. So what we want to do is we got this little pause here right now, right, on the daily. We got the RSI back to overbought level, which we haven't had since we topped out in the most recent run. Right, so this is good. So what we want to do is we want to look at the 4-hour chart. The 4-hour chart, look at the RSI is very overbought. This is a good sign, right? It shows lots of momentum with the bulls, and this hasn't been at this level for, you know, since even before the top out, right? Since here, which was the first bull run, and then it got weaker on the second bull run here, a little bit weaker, but this is good. So this just shows us the strength of the bulls, and we want our RSI to be high, right? So now we need to cool it down a little bit. So what I was looking at is last time RSI, and that's in this area here. Last time when we broke out in April, May, June, when we broke out on the June. So if we have a look at this area, once we had the bull break, so I've denoted the bull break above here, out of here. So once we broke this, the 4-hour RSI went really high as well, up to 90. And then we've consolidated. You can see the RSI is cooling down, but it never got oversold on gold. It reached about 40 level, right? 40 level. So what I've done is I looked at this area on the 1-hour chart. So just to find some buying zones. So the good buy zones were back in June, July, right? Yeah, this is June. So this is the breakout. This is the breakout out of the channel and out of the horizontal resistance. So then we got in this area, we got overbought. Here we got overbought, and then we're cooling down. And look at this area here, the RSI. I got my RSI indicator here. RSI, which is a green line. Not sure how well you can see it. Should be pretty good. You can see the RSI got oversold here. This was a good buy zone here. You buy here, you pretty much got the bottom on the RSI oversold. Maybe you try to buy here as well. RSI almost pretty much got oversold, so you buy and you face a little bit downside here as well. But you're in the bull market, so you need to have your stops worked out, and you need to understand that if it's bull market and the 1 hour RSI gets oversold, it is very, very likely to bounce. So you buy here and you try to not be scared, right? Try to not be scared. If it goes down a little bit more, you put your second position here. So you can see here, then we pushed up from the oversold levels to overbought once again, and then we got oversold once again. So this was again a good buy zone here, and I put the lines here: 1 hour RSI oversold, bottom of consolidation, and then you never got 1 hour oversold again until the second time. Here. So actually, maybe what I'll do is I'll put down this. So we got oversold here, and then we got oversold here and here, and we dropped a little bit lower than oversold. So this was the consolidation once again. Right, this is all the 1 hour oversold levels I'm putting in. So like that. Let's see what it's gonna look like on the 4 hour. Can we see those things? So you can see on the 4 hour we never really got oversold. So you once again over here your 1 hour oversold was a buy signal, and over here your 1 hour was oversold while the 4 hour didn't really get oversold. So or maybe we got the 4 hour oversold here. So only one time, right? Only one time. So 1 hour was the better signal to add to your positions. And then, you know, if let's say you're playing the ETF that gives you multiples like JNUG, if you're buying, then you can take some profit off to get your average down and then reload again. You can see there's been how many? 1, 2, 3, 4, like many 1 hour oversolds. So you had through this consolidation. So that's the dip buying strategy that can be used for the gold. And look, we're looking at this from from the previous breakout area, so it will be different this time, right? It's not going to be exactly the same. What I'm thinking is now what we're going to do is we're going to have the bulls are going to be stronger, because psychologically what they're thinking now is that we were, this is the first, pretty much, this is sort of, this is like the bottom hunting, like people bought here, bottom hunting. Then this was the first breakout, and this is going to be the second breakout. So now more people are paying attention, more people, I didn't pay attention back then, now I'm paying attention way more. I'm trying to get in. I got in here. I'm trying to get in more now on this consolidation and expecting more upside, right? Just gonna get a drink. So okay, so we identified next time 1 hour gets oversold, we want to buy, right? So let's have a look on the 1 hour. On the 1 hour gold right now, the RSI is 52, about 52, about 50, right over here. So what we want to do is we want to buy if it drops more, if it drops a little bit more, or if the RSI comes up and touches the price action, we want to buy. You don't want to buy 100%, you want to buy a portion, because you can always go sideways and drop more, and then you want to load some more in, and you always have to look for the stop levels, right? You always have to have a stop level, and that is something that I will identify for myself and I will have to make a plan of how I'm going to treat the stops. So yeah, so we looked at that, right? We looked at that. Also, if we look on the 4 hour, and we go back and look at the previous one, at the previous bull market in once again back in June, July, this area here. If we are looking at the initial breakout and the EMAs, you can see the EMAs, the 21 EMA, we dropped below it here, which was a good buy zone, and we dropped below it here, good buy zone once again, on the first breakout. Then we had the second push higher, and then we dropped once again, but we actually dropped quite a bit lower than the 21 EMA, so, and we almost got oversold on the 4 hour, right? The RSI here was 35, so we have to be careful with the 21 EMAs. We do drop below them. So yeah, the RSI I think is a better indicator on the hourly for my plan myself. And if you look at the daily EMAs, right, daily EMAs, so we had the breakout here, and you can see the blue one is the 13 EMA and the purple is the 21 EMA, and we never touched it until we had this long consolidation, and basically it only dropped below the 21 EMA over here to stop everyone out, which was a tricky move, I guess. You know, if you had your stop here, you got stopped out, which was a pain in the butt. You had the run up after that. But if you bought between the 13 and 21 EMA over here, you were okay. You could have sold the top, I guess, over there. If you bought it over here, the price has never gone down that way. So you're sweet. You're very good. So that could be another buy area if we do drop to 21. If the 21 and 13 EMA catch up to the price action, you can buy between those two in this area. So that's another buy area. So actually, what I'm gonna do is I'm gonna make a note for myself on the 21 EMAs. So I'm going to say a while after the breakout on first long consolidation. First long consolidation, which is this consolidation here, which lasted 38 days, so more than a month. This is when you could have bought at the 21 EMAs, right? Not sure how you can draw this, because see, we broke out here with the bulls showing us the muscle, right? But they weren't ready yet. They got pushed back down. So what you can do is you can so I said that you can buy between daily 13 and 21 EMAs if you have a month-long consolidation or so after the initial breakout. So you missed this one, let's say you missed this one, you missed the first short consolidation, you want to get in on this longer consolidation here, and then you got 21 EMAs, 13 EMAs pushing the price action up, so that's your buy, and you have to be careful with your stops. As you can see, these people that bought here, they got stopped out. if you put a profitable stop. So have to be careful with that. The market will try to shake you out. So those are the buy zones that we identified for gold. But what I want to really do is I want to actually play silver, because I do have a position in gold, and because silver and to gold ratio is is very good, very well set up. I want to play silver. Let's have a quick look at the gold and silver ratio. So actually we'll look at it on the monthly chart. You can see basically, as far as this chart goes, sorry guys. So see, the history doesn't go much further, so you can see the ratio reached pretty much all-time high on this chart, which was almost 100, and then it dropped, and you can see it's going up in this rising wedge, right? Rising wedge, and it basically dumped. So if we look at it on the weekly, right now it wants to break the bottom. We broke it here, and then we pushed back up, and now we're stuffing around it. If we do actually confirm and break downwards the gold to silver ratio, then this means the silver is going up much faster than gold, right? Much faster than gold. And then the silver ratio will be, the historical silver ratio is probably around 30 or something, or 40, I'm not sure, or 50. So what if the ratio is going down, that means silver is going up much faster than gold. So you want to be in silver in the precious metal bull market to reap more rewards, right? So this is if we do break down out of this wedge, you want to be in silver. I wanted to show you that. Then let's go have a look at silver now. Silver. Where is our silver? Here we go. So silver on the monthly. See, it got beat up way more than gold. Look at gold here. Gold just dropped down, a little bit. 45%. That was the bottom for gold. But silver, it ran up way more, and then it dropped down way more. It dropped 72%, right? 73% almost. So it's like a shitcoin, like a Bitcoin, like cryptocurrency kind of stuff happening here. Massive bubble, boom, you lost 70% of your worth, right? So now it bottomed out here, and we're actually coming up, and we are above the 21 and 13 EMA, and we're bouncing off it for the first time, since this fake out here. So look at this fake out, right? This can always happen again. You can always have a fake out here again, although this one looks way more constructive than this one. This one we just had boom, big bounce and then come down, but this one we're consolidating here. We're showing that we have strength. We have the bulls have consolidation. They're not even, they touch the 13 EMA here and then pushed back above, so it looks way better. It looks like a bull flag, right? It looks like a bull flag. So what we want to do, we want to be in silver, and I was looking at silver. So let's have a look on the weekly, just quickly. So on the weekly, compared to gold, we did drop below the 21 EMA more here, but it's a little bit of a different setup. We ran more on silver as well. So we drop more on silver. Let's have a look on the daily. So on the daily, I got a couple of drawings here. You got this channel here, which we broke out, and we got this channel here, which we broke out as well. It's like a falling wedge kind of thing. We broke out, and now we're consolidating, same as gold. We topped out, we're consolidating. This is the resistance here, same as gold. This line is a resistance now, is going to become support. If it does drop here, this will be the best buy here, but the price should not drop back down here. The bull should be strong enough to hold this sideways and then push up. That's what I'm thinking that's going to happen. Anything can happen, but I'm thinking it's going to go sideways and then push up. So I want to load up a bit of silver in some good spots. So what I'm going daily 21 EMA. So if we look at this breakout here, which is the June breakout once again, I drew a bit of tightening pattern here. You got the channel sort of, and then you could also draw like a falling wedge with this dotted line here, right? With a dotted line. So once we broke out, we had the bull run, and look at the 21 EMA, which is the purple. We pretty much consolidated. This would be a great buy zone. Touching it, you know, we dropped a little bit below here, so this was a little bit scary. But if you held strong, you had all these gains, and then you had another buy opportunity right here, 21 EMA, and a little even drop here, and this is 13 EMA, and then we topped out. So it's a great buy zone. Is that going to happen again in this? Assuming we're in the bull market now, is it going to happen again? So that's a good buy zone once again, daily 21 EMA. The other one is if we go into 4-hour chart real quick, we're just going to have a look on the 4-hour. So you can see that we had the 4-hour, we didn't get, after the breakout, we didn't get oversold in the 4-hour at all, so you couldn't load up on the first consolidation if you were using 4-hour oversold, but you could have loaded up here. It got one time oversold, and then we had the massive run of 10%. It's not that massive, but 10% is really good if you get that. So 4 hours sold, but what we really want to look at is the 1 hour. So after the initial breakout in June, we had 1 hour oversold areas here. Consolidation, and we had a 1 hour oversold. We got a little bit more than a 1 hour oversold here, so it was a bit of a drop. So you could have been scaling in here, scale in. And then you got the bullish divergence happening, and then we had a push up, and then we got oversold once again. So you could load here once again, maybe take some profit because the RSI got extreme to 80, and then you had the bull run. So and this is where you got the 4 hour oversold. But you never dropped back to these areas here where you loaded. So if you got your stop just profitable, then you're cheering, right? You're cheering and you dropping back down here, and then you had this big bull run. Big bull run, 20%, or more than 20%. So it's like like 30%. So you got 30% there to the top. And if you take a little chunk, you take 10%, you take 15%. You haven't even done the whole. You're not gonna unload at the top. You're gonna come out somewhere here or here or here, so you're not going to get 30%. Let's say you get 20% out of 30%. So it's a good trade. And then you wait for this consolidation. And well, the other thing is, where do you take the profit, right? Where do you take the profit? So the profit was, if you're looking at the hourly, this was the top, right? What you want to do is very extreme RSI, because you're in the bull market. The bulls have lots of momentum, and the RSI is the momentum. So look here, you got to 90 RSI, but you didn't want to sell here. So maybe the way to sell it is when you get number of these 90 RSIs above. If you got the RSI above 80 a few times, and then you sell, all right, after sometimes. So that way you can pick the top, but it's different all the time. It's never going to be the same exactly. But maybe you want some bearish divergence to get out. So let's have a look if you could time it on the 4-hour as well. On the 4-hour, you had the scary bear divergence here, but that was not the exit because you had this whole bull run here again. So maybe it's scary, but one way to see it is you had huge bull run right here with this big candle, which is usually indicates the tops are in, because this is sort of like a climax stop. It's like a climax stop where you're getting lots of percentage gains very quickly. Usually it is the sign of the end, and then once you drop, big drop as well, so that's a red flag as well. So you try to get out on the bounce here. So these are this can be studied further, how to get out at the top. So maybe I will try to study previous ones to see if I can plan for the future how to get out. But I'm very bullish on silver and gold at the moment. The fundamentals and the technicals are lining up. The fundamentals is that you got the interest rates. You got the interest rates that are pretty much going negative and zero. Like in Europe, it's like negative. Like you have to pay to the bank if you're holding money in the bank. So people don't want to hold cash anymore in the bank. You'd rather hold gold, right? The gold doesn't have any interest, so you don't have to pay the bank. I mean, you have to pay storage fees if you're holding physical, and maybe some ETF fees if you hold them in ETFs. But you'd rather hold gold in this, this current fundamental environment is very. I think it's very bullish for gold because we've had a massive run on the S&P 500. It's just been up and up, and look, this looks like a climax top is sort of coming in here. Maybe we're gonna get another couple months of upside, to 360 somewhere, 380 even, then we're gonna have a massive crash if we go up that fast. Let's say until June, July. If we keep going up and we start getting above 360, it's gonna look scary. It's gonna look very scary, and the drop will be bigger. But who knows, if they keep printing and they keep devaluing the US dollar, anything can happen. But my main thesis is that gold will go up and the market has to drop. And if the market is dropping, where do people keep safe haven? Well, first is US dollar. And second is gold, right? So US dollar should go up and gold should go up. But gold, let's see, if you zoom it in like here and you expect gold to go up, you can go to 3K. You can go to 3K by 25, right? Okay, so we talked about how we want to get in. So we want to get in on 1 hour RSI oversold on silver. What else we're talking? So what you can do is you can also play the miners, right? So you got the GDX. You got the GDX and you got the JNAG. The JNAG is the 3x ETF, so you got massive gains here. For example, look, 200%, 220% here on the JNAG, but it's 3x ETF basically of the GDX miners, so it does that for you, and you can see that the GDX here is way more bullish than gold just by looking at the 21 EMAs. The 21 EMA pretty much never gets touched until the end here, right? And the reason for that is because since June, see, this is the 3rd of June, end of May, we started the bull run here on GDX. Because GDX is the miners ETF, the reason it's gone up way faster than gold, you can measure here, so it's went 52%, right? Huge amount, even more than silver as well. The reason for that is because it's correlated to S&P 500, and the S&P 500 actually bottomed out here. So you can see end of May. If you look at the SPX, where is the May? Right. It's here, right? Yeah, here. So we had a massive run on S&P 500 from June as well. So S&P run and then gold run. Therefore, the miners are gonna run even more. So you had a 10% on S&P 500, so that pushed the GDX up quite a lot in that time, right? This time you got S&P 500 going up, you got the gold going up. Therefore, the gold miners, which are the mining companies, they go up even faster. So is it going to be the same this time, right? You got to think about, is S&P 500 going to go up while gold is going up? I don't think so. I think gold is going to go up and silver is going to go up, but S&P 500, well, it can go up because I'm expecting S&P 500 to have some sort of a climax top, right? All the people that wants to short the S&P 500, they will be forced to cover. They will be forced to cover, and that will push the S&P 500 even higher, even faster, and then we will top out. But when is that going to happen? Who knows? Who knows? Just play the technicals, play the technicals. So, okay, so how long has it been? It's been already 40 minutes, long video. The one last thing that I wanted to cover is that the yield curve inversion, which is the short-term interest rates for government bonds versus the long-term interest rates, when they invert, when the short-term interest rate is higher than the long-term, meaning logically everybody wants more cash right now versus the long-term, that basically signals that the system is broken, right? The system is broken, and this has been pretty much 100% indicator over the last how many times? Like you can see over here, you got the inversion, and here is the recession. 1, 2, 3, 4, 5, 6, 7. Like last 7 times, it's been 100% indicator apparently. And usually the recession happens up to 2 years after the inversion of 10-year to 1 year, right? So up to 2 years. What that means is that we can have a recession happening from now until 2022, right? We can push, because the version just happened recently. We can be up to 2 years. So if it happened in 2019, it's from 3 months to 2 years. So it can go up to 2022. Actually, what I've done is I've put it on the project. I've put the timeline on the project, and you can see here. You can see here that we have the yield inversion, and then you have yield inversion from what is this? 2 years. This is supposed to be 2. Did I write it in binary? Sorry, this is 10-year to 3 months yield inversion, and then recession happens 2 months to 2 years later. So my recession here comes up in 2021. 2021 actually. So it's not 2022. 2021 in April. We can have a recession up to the March here, you can see. But also the other thing I put here is the US elections. The US elections is going to happen, primary elections. There's primary election from 2020 January to June or something. I'm not 100% on this US system. And then the US election, it happens in October, November 2020. So Trump, what he's going to do is he's going to pump the market as much as he can before the election, so he can get the vote from the rich guys, the money, the big money. Always wants the market to go up. If the market crashes, Trump is not going to win. He's not going to get re-elected. So he wants the market to go up. He's going to do everything he can by pushing the Fed, Jerome Powell, to print the money, and after he's elected, maybe that is when the market's going to crash. But everybody thinks that, so maybe the market's going to crash before that, or maybe the market's not going to crash, it's going to keep going up. You have to be ready for all. Scenarios that can play out. And then look, there's a BTC halving here, so maybe Bitcoin is going to go up somewhere before July. I think it's in June. It's not exact timeline here. It might be like a month or two off. So May, June 2020 when the BTC halving is happening. So maybe the Bitcoin should go up before then. So anyway, that's what I wanted to talk about on this video. Just this gold trade that is playing out, and I want to load up on these sideways movements here. Maybe we're gonna get 1 hour oversold. I want to play silver more so than gold. Look, silver almost 1 hour oversold. So if we drop a little bit lower, it could be a buy zone. But as always, this is not a financial advice, and I'm not, who the hell watches this channel anyway. I mainly make these videos for myself, and yeah, don't invest what you can't afford to lose. Basically, always have your stop levels. So if you buy anywhere here, might be a good buy zone for more room up. All right, thanks for watching. Merry Christmas, Happy New Year, and all the rest. Bye bye.